Imagine you're a farmer planting your crops and hoping for a bountiful harvest. You sow your seeds, and you're not just thinking about the sunny days and the rain showers that will nurture your crop, you're also thinking about the future, the months ahead when your crop will be ready. This is where we introduce the concept of futures trading. So it sounds complicated, but it's as simple as this. You're a farmer today, but you're also a trader of the future. If you're not selling your crops right now, you're selling the promise of your crops. That corn is still a seed. The wheat, it's yet to sprout, and you're selling their future selves. This is what trading futures is all about. But it's not just for farmers though. It's for anyone who wants to buy or sell something in the future. A commodity like corn or wheat, but yes, also financial instruments like stocks and bonds. You're making a deal today for something that will be delivered in the future. But why do this? Let's think back to the farm. So you know your crop will grow, but you don't know what the price will be when it's time to sell. By engaging in futures, you can lock in the price today, protecting against that uncertainty of tomorrow. But just like farming, futures trading isn't without risks. Prices can fluctuate wildly, and the future is always uncertain. You might end up getting less for your crops than you'd hoped, or you might end up making a great profit. And that's where the thrill of futures trading comes in. It's a game of prediction and of speculation. You're trying to predict what will happen in the future, and you're placing your bets accordingly. So let's take that farming analogy and take it into the world of trading at a computer at your desk. So as the sun sets on your farm, you're not just a farmer anymore. You've stepped into the world of trading. You're navigating the future with your crops. You're making deals, taking risks, and potentially reaping those rewards. The farmer, in essence, becomes the unexpected futures trader. What exactly is futures trading? Let's imagine a bustling marketplace where buyers and sellers negotiate everything from apples to zirconium. Now, replace the physical goods with financial instruments or commodities such as the NASDAQ, the S&P 500, the Dow. That is the world of futures trading. Futures trading is a financial strategy where parties agree to buy and sell a specific quantity of the commodity, the currency, or the financial instrument. But the twist is the transaction doesn't happen immediately. It's scheduled for a future date, hence the term futures. Try and think of it like this. You're a baker and you need flour, but instead of buying flour every single day, you sign a contract with a miller to deliver a specific amount of flour each month at a predetermined price. This contract is your safety net. It allows you to plan your budget and protect your bakery from unexpected price hikes. In futures trading, these contracts are the bread and butter. They deal with the quality and quantity of the commodity or financial instrument that's being traded, as well as the price and date of delivery. But once you're in, you're in. There's no backing out unless you offset your position with a counter trade. So meaning if you buy, you need to sell it. But why would anyone want to trade on something they don't even own yet? Well, it's about speculation and hedging. Some traders use futures to speculate on price movements, hoping to profit from the fluctuations. If you think gasoline is going to move from $4 to $6 in 3 months, then you might buy gallons and gallons and tanks of gasoline at $3 and then sell it to people at $5 when the price at the gas station is $6. Others use them to hedge against potential price changes, protecting their investments like the baker that we were talking about. But futures trading is a vast, dynamic marketplace where every tick of the clock means that a profit is earned or a loss is incurred, which is how you're able to basically treat futures the same way as stocks. One of the things that got me interested in trading futures, though, is that futures does not have the PDT rule. The PDT rule, or the pattern day trader rule, is a regulation that was put in place, meaning that if you are trading stocks, you can only make 3 day trades within a 5 business day period. But those don't exist in futures. Why do they not exist in futures? I have no idea, but they don't. I also prefer them to options because spreads on options are huge compared to futures. Downside to futures and things that keep people away from them is that you do still have to pay commissions on your futures contracts. But when you look at the long game, the benefits definitely outweigh the cons. It's a game of strategy and foresight requiring clear understanding of market trends, an edge that's been back-tested and practiced, as well as an ability to emotionally disconnect from the trades and follow your rule set. But in one sentence, futures trading is a commitment to buy or sell an asset at a future date at an agreed upon price. Now that we understand what futures is, why don't we actually break this down into 3 digestible steps? So step 1 would be market research. You need to picture yourself as a detective piecing together a complex puzzle piece. Your mission is to understand the market and the commodity or financial instrument that you're interested in. Personally, I trade the NASDAQ. This involves studying price trends, understanding supply and demand dynamics, and keeping up with the news that could impact the market. This type of research is similar to reading a book before you watch the movie. You're not going to know exactly what's going to happen in the movie because things often alter and change, but you are going to be able to have a much better idea than if you didn't read the book at all. Step 2 is finding a broker and possibly a prop firm. Personally, I use Trade Day as my prop firm. So think of this as seeking out a guide for a challenging hike. You want someone who knows the terrain, has a great track record, and can navigate you through the process. A reputable broker such as NinjaTrader, which is what I use, can provide you with the tools, advice, and platform to facilitate your futures trading journey. Step 3 is opening a trading account. This is just like setting up a bank account. You'll need to provide some personal information, make an initial deposit, and agree upon some terms and conditions. And the 4th bonus step is buying or selling those futures contracts. Now that you're at the park, it's time to enjoy the rides. In futures trading, this involves deciding how many contracts you want to buy or sell, setting your price, and then executing the trades. It's just like deciding which roller coaster to ride first. This step is really where the excitement lies. And now suddenly, you too are a futures trader. But just remember that every trader's journey is unique, and while these steps provide a general guide, your experience will differ than anybody else's online. As with any form of trading comes with its own set of risks and rewards. So imagine you're a surfer and the waves are the market. They're unpredictable and they're full of potential. Each wave you catch could mean a thrilling ride or a wipeout. The rewards of futures trading can be likened to successfully riding that big wave. You have the ability to hedge against price changes, protecting your investments like a well-executed surf move. And the potential significant profits, that's the adrenaline rush as you ride the wave to the shore. But just as the sea is unpredictable, so are the markets. The risks are like undercurrents hidden beneath the surface. Market volatility, the sudden change in prices, can pull you under before you know it. And the possibility of losing more than your initial investment, well, that's like being caught in the riptide, pulling you out further than you intended to go. It's important to weigh these risks and rewards before diving into futures trading, just like you would check the surf before you head out. Futures trading is my preferred financial strategy, but it's not without complications, and it's just like a game of chess when you're always trying to think several moves ahead. You're not buying or selling an asset right now, but you're making a deal for a future date. But if you are day trading like I am, you don't need to think about that. You just can think of it as a stock on a different exchange. And remember, it's not just about making moves, it's about understanding those risks and rewards. It's just as important to know when to step back as it is when to dive in. I'm on my journey to become a profitable trader, and trading has been a roller coaster with ups and downs, but it can be a profitable one if navigated well. It's a world where even a humble farmer can turn into a savvy trader with the right knowledge and strategy. While it may seem intimidating at first, with careful research and consideration, anybody can become a futures trader, even a humble farmer. And if you want to see futures trading in action, I analyze my daily trades and post them to my channel. You can check them all out on this playlist right here.